following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks, and I certainly empathize anybody living in the northeastern United States. I'm watching the news because of our grandchildren living there. It was really funny. They were talking about all the snow to us today, so you really got a lot of bad weather coming, so I certainly hope you make it through okay. Weather here in Arizona is pretty good this time of the year, but we'll have to wait and see. The Super Bowl is here in Phoenix, Arizona, a little town called Glendale on the west side of Phoenix, and the hotel rooms are just absolutely ridiculous. The place that Sarah and I like to stay, it's a spa. They're very nice. It's not super expensive, but it's very nice. The rooms are usually about $137 a night, and they're going for $1,400 a night, and it's a 4-night minimum. And they have 2-bedroom suites that go for $4,000 a night that are going for $4,000. So that's you can imagine what's going on with the insanity of a football game, for heaven's sakes. But that's what's going on with the I'll stay home and watch it on TV. That's what I would do too. Okay, well, my house is too far away. We're about 110 miles from there, so it's a pretty long drive, but we'll wait and see. We got some very important things happening in the market today from a technicals perspective, and they're not all in the stock market. The real play, I believe, is in the foreign currency markets, and we also have our first real potential in crude oil. So what we'll do is we'll start out a little bit with the stock market, and then we'll move on to the currency markets, because they have really done some major things here from a technical basis. And we had a lot of news over the weekend with the Greeks doing whatever the Greeks do down there on Sunday, vote, I guess. But the technical part of it is what's interesting. So we'll start with the stock market. The New York Stock Exchange Index is now making lower highs from the one we made in late November. Then we had the other one right around Christmas time was a lower high. Then we had one on last Thursday, which was a lower high. And so as long as we don't take out the highs that we made last week, we've got a really strong potential for this market to move to the downside. But here again, it's a potential. The German market is absolutely going parabolic. It is really taken off. It's busted through every conceivable number that we're looking at on a long-term basis. The last one came in at 10,760, and we went quite a bit above 10,800 in the German DAX. But you know, that's the German market. Whether that's related to what's happening with the euro or not, you know, I'm not absolutely sure. But what I wanted to do now is I'd like to go to the euro and just show you what we see on a technical basis. And remember, folks, this has nothing to do with anything fundamentals. I don't understand the fundamentals in the Forex markets on what they're doing with these elections. But what's important here is the numbers that we're looking at. From 2000, in August of 2000, and that's basically when the euro started to trade actively, was sometime around 99 or 2000. The 61% retracement of that move comes in at 1.1134, and last night the low Friday was 1.1115. Then we rallied about 150 pips. Then last night, in a very thin market, to begin with, the market got down to a couple of ticks below 1110. It hit 110099 or something like that, and has already rallied 200 pips. So that's telling us that there's a possibility here that this euro has made a pretty significant bottom. Now remember, the whole world is bearish the euro, as am I. I think we are eventually going to go down to below par. But right now, I think we have reached an area that really you need to watch the euro for a reversal type move. There's several reasons for that. If you'll take a look at this long-term weekly chart, you'll see that we have several A, B, C, D patterns, one going back to 2007 through 2008, and then we have another one from 2011 to where we are on the present scale. So that's very important that we have several of those A, B, C, Ds. The most important thing, however, is the fact that we're at that 61% retracement, and the euro follows numbers on the numbers for the Fibonacci summation sequence and numbers of sacred geometry better than anything you could ever possibly trade. So we really need to respect that 1.150 area in the euro. It's just very, very important. The other important part about this chart, and those of you that like the works of W.D. Gann and Jim Flanagan and folks that, look at price and time, is that if you look at the time frame between 2000 and 2008, you've got that 7-year time frame right there. And if you square that out from the high to where we are now, we're squaring that out at 2015. So it's basically the old Gann rule of 7 years up, 7 years down, or it could be 7 days up, 7 days down, that type of thing. So we have some squaring of some price and time coming in. But the most important thing, without any doubt, in my mind anyway, and whatever vote that casts, is that we are setting at that 61% retracement last night, and the market handled bad news extremely well. The first indications were that the euro was going to be about 150 to 200 pips lower. That's what I was getting. It was around 4 o'clock in the afternoon, New York time, where we were starting to see indications coming out of New Zealand, where Forex, starts on a Sunday night. But those spreads were 70 pips apart, so you couldn't really rely on those. So about an hour later, we realized we were going to be about 60 or 70 lower, and the market was trading very actively. And it didn't go down below Friday's low, except a few hours later for just a brief time. It was, I guess it was one large order or whatever it happened to be in the middle of the night. And then the market reversed and has been rallying strongly ever since. We're well up over $2,000 in the euro just since last night, and this could be just the start of something big. You need to keep an eye on it. That's the thing that I would suggest, because follow the money. This is the major currency in the world, the euro versus the U.S. dollar. Nothing trades any better than this, so you have to pay attention to it. That's the key word here. Now the next one we want to take a look at is also currency, and we have to go across the pond to the Queen's Castle there in London, and you'll notice we're looking at the British pound on the weekly basis. And this one is even actually more amazing than the one in the euro, because if you look at the Fibonacci number from 2009, when we were making a low at about 135 in the British pound, the 61% retracement for that number came in at 1.4943. And you'll never guess what the low in the euro was Friday. This was the pound, excuse me. That was the exact number, 1.4943, right to the exact tick. We've only rallied a little over 100 pips so far in this one. But here again is another one that we need to pay attention to, because of the fact that we are looking at a market that has a chance to make a major bottom in here. This is a major number. We have been coming down sharply since July without very much of a rally. We've had a couple or 200 or 300 pip rallies in between, but this rally could be even more significant. So the pound and the euro have both completed what we feel are major corrections in here. The market is so far saying that is what's happening, and we will have to let history tell us whether this is going to be the right thing to do or not. Now what I'd like to do is I want to share some information from my good friend and trading partner Jim Bartolione. He does a great deal of work with time and price, and also with patterns and ratios. And Jim has allowed me to use this chart that he's drawn up on the U.S. dollar index on a monthly basis. If you can see, during the time of 1992 to 1998, we had a big rally that went into the dollar index. That rally extended from 1992 for 10 10 years, all the way into 2002 when it topped. Now, the same time frame now, as you can see on this chart of where we are looking at the time frame between 2008 and where we are now in 2015. This is what it's basically saying here, is that we are ready for a major correction here in the U.S. dollar. Well, if you look at that and you stop and think, well, the U.S. dollar index is 50% weighted by the euro, and we made a perfect 61% retracement in the euro, that should tell us that maybe we should be watching this euro very, very closely for a potential for a substantial move. Maybe it's only a short covering rally, or it could be something bigger. We don't know. But this is the time where we really want to be watching it, more than anything else. So you have a lot of things, coming together. You have similarities between rallies that we've had in the past. We have the U.S. dollar index at a 50% retracement of the high that we made from 2002, where we were making a 3 drive to a top pattern, and also we were making a head and shoulders at that time. So all of these things are telling us that maybe there's going to be something happening in the Forex markets. It could be a little bit of a surprise, to the rest of the world. So we really want to, watch that very, very closely. Now, if we go across the other pond, and we're going to go over to Japan and take a look at this market, and we'll see that this market has already reached the 61% retracement about 4 weeks ago, and we never went much above it. It was right around 120. We got to a little bit above 121 in a fast market that one day, and almost the rest of the time, we've been trending lower all during this time, and we've got a chance for a pretty severe correction in this one also. So it's showing you that there are some things, and believe me, these are just technical things. We don't know what the fundamentals are. Never could understand that stuff, but the price charts are easy to understand, because if prices are going up, there's more buying, and if prices going up, there's more selling. So if prices are coming down, there's more selling. If prices are going up, there's more buying. And so far, in the last few weeks, there's been more selling coming into the end than we have in buyers. So we'll have to see this. We have a question from someone in the Tiger's Den about how does the Forex market, affect the equities. I've looked at all those different cross rates to find out if any of them follow. And frankly, I've not found any correlation that lasts for very long at all. However, you will find times where the correlation is extremely high. Like sometimes in the gold and in the euro, there's strong correlation. If they're selling in the euro, they'll be selling in the gold, but then that'll switch. So you can't really draw any really strong conclusions about that. So we're going to take a little break here. We've got the Dow down a little bit. We've got gold and silver under some pressure, and we'll be back right after these words.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted into the Tiger TV the chart of the DAX. Now, the DAX is the German S&P. It's quite heavily traded on a worldwide basis because the time frame is better for other parts of the world than ours, and but it does trade quite actively. It follows the number sequences just incredibly well because it is actively traded. But if you'll notice here on the DAX, it's extremely bullish here these last, since January the 5th, we've had only one down day actually during that whole time. So it's been basically a one-way Corrigan, all the way up here. It looks like we're going to 11,000 because if you'll notice on this chart, you'll see the blue ABCD line known as the Thunderbolt or the ABCD pattern. You'll see that measures to 10,991, which is a heartbeat away from 11,000. So that appears where the DAX is ready to go, and we'll have to wait and see. As we're here in our room today, we're looking at the charts of some of these other things that we're watching, and we're right at a major Fibonacci point now on a shorter term basis in the S&P 500. We're setting right here at the 2048 level, which if in fact this is bearish, this should be where we should stop right now, because we had the gap down that went just right at the 786 of the previous day's low. That was down around 2025, and now what we've done is we've rallied up to the 61% retracement up here at the 2048 level. Now, if we get much above, 2050, would be looking probably at 2054 would be my suggestion. But, these are different markets because you can't trade the DAX, like you trade the S&P because they're totally different stocks, totally different people trading it. So you have to allow the market to really tell you what you're going to do. If you'll remember in Bernard Baruch's book, My Own Story, he talks about the stock market, and he said it's not a stock market. He said it's a market for stocks, and so each one of them is a little bit different, so you have to pay pretty close attention to each one of them as you're watching it. No different than if you're looking at gold and silver at the same time. And so that's, I think, the important thing to keep in mind. Now, I wanted to bring the chart up of the VIX because I always listen to Basil's description of it. No one does it any better than the man himself. And we've had a pretty big, move in the VIX index recently. What's interesting about it is the fact that the VIX is actually down today with the stocks, down. Usually that's a very strong anomaly, in my opinion. Now, what I'd like to post here to show you is just some cycle things that we keep an eye on, and that is you're looking at the 17 to 18-day cycle in the DAX that we've had here since last November. It's been within a day or two each time. Now, we've had the three higher bottoms here in the DAX. We had one in December, came in around 11 and change. Then we had another one in December that also came in around 14, and now we're having another one. We're just a tad under 16 right now. So if this is correct, the VIX index, should be ready to, start to move, higher today. In fact, I'm actually shocked that the VIX was down today. Given the fact that the Dow was down quite a bit at one time. This could be very important here. So if you are short stocks, the S&P, whatever it is, make sure you use a pretty close stop. I think 5 points would be a maximum because this is really an anomaly. Why the VIX is down, with the stocks being down, that has a very, very high correlation. I unfortunately I missed Basil's show today to hear if he made an explanation about that, but that's an interesting phenomenon to take a look at from my point of view. So we'll see what's going on. But if we get much above 2050 in the S&P cash or futures, I would think that's probably going to be it's going to go on the way up to the 786 and maybe even make new highs. Don't take too much of a correlation for what I showed you in the DAX to what we have in the S&P, because these markets, I follow the DAX very closely, and they are different, folks. I mean, they trade the same with the same numbers and stuff like that, but they're totally different markets. So just because the DAX is strong, that doesn't mean it's going to pull up the rest of the world. Okay, folks, we've got to take a little break here for the longer break. 877-927-6648 if you want to call in. And we'll be right back after these words.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and like the announcer said, one of the goals at TFNN is to have a interaction, and boy, it's certainly, you do have that with TFNN. We have some people that really give you a lot of great information, and the chart that I just posted here on the soybean chart is really an interesting one. This came from, it's actually the chart that I drew up, but the idea for it came from Mr. Z in the room, and he alerted to this several weeks ago. It was getting ready to form, but if you'll follow this soybean chart, it's completed a perfect Gartley pattern where you have a perfect AB CD pattern, and it certainly makes it interesting, you know, to say that it's there. I've posted it in the room. I hope that it's coming through okay. Might have a little technical difficulty, but I don't think so. I think it's all right. But John, Mr. Z pointed this out to us. It was really interesting the Sunday night with all the craziness going on with the currency. The soybeans held very well. They've been coming up strongly ever since that time. They've already, you know, made the amount of money they were risking on the trade, which was 10 cents, which is the first sign that this could be a potential bottom in here. But as we say, it's a potential. We don't know whether it's going to be right or not. I really like this one particularly well because if I'm wrong, I can blame it on somebody else, which is always a good thing. Just joking, of course. But we'll see if this is going to be the case. Actually, the soybean meal is actually acting better than the soybeans. And soybean meal has a very strong seasonal tendency here to have a pretty good move to the upside. Now I'm trying to have Arch Crawford as my guest on Wednesday to talk about that. And I'm going to have Shane Smolian, my co-author from our new book that'll be out in February. He'll be on in February. We have a new member of the trading group here. Shane had a little baby boy. Well, actually, his wife had it on January the 26th. And so he's going to be tied up in diapers, I guess, for a while. So right after February, about the second week in February, we're going to have him on to show some of the things that he's working on, because he has some exciting things that he's working on astrology that I think you folks would like to see. But I'm going to try to have Arch Crawford on Wednesday. It's a pretty good chance of it right now, but we'll know for sure Wednesday when we start the show. Another guest that we're going to have on right after the springtime, after April or May, it'll probably be early May would be my guess, will be Larry Williams. We're going to have him on for an extended segment, and I think you folks will really like that. Well, we've got Priceline Charlie coming in from La Paz, Mexico. Charles, are you there?
I'm doing well. How about yourself, Larry?
I'm okay. Every day above ground's a good day, and I stay away from open graves. What can I do for you, my friend?
I'm looking at Priceline. It seems to have. We were at the point where it was just back and forth. So I shorted some at the 1,050 level approximately. When it got down to 990, I said that's usually a place where they like things to stop, and it did. Bounced back up, covered at about 1,000, and now I re-shorted again. And what does it look like? Because it looks to me like it's over the 9-day moving average on the daily chart, and it looks to me like it could either bounce from here back up higher, or it can start heading down.
Wow.
So I was wondering what.
Well, Charlie, let me tell you something. You're very perceptive. You're saying to me that it could either go up or down?
It always goes the other way.
Charlie, it looks to me.
Stock market.
I posted the chart into Tiger TV, and it looks to me that it has 975 to 925 written all over it. That's what it looks like to me. That you have two major A, B, C, D patterns in here. But the more important thing, I think, Charlie, is after the bottom was made at 990, this has been the most pathetic rally for this stock, since way back in September before it broke $200 a share. So this to me looks like it wants to go lower. If it gets above 1050, certainly be wrong. But right now, this thing looks like it wants to go between 978 and 925 is what it looks like to me, just with the ABCD patterns that are there.
That's what my feelings are. And I think it may start later today or maybe tomorrow, depending. But it's close. It's been 4 days above the 9-day moving average, and usually that's the place it breaks down within 1 or 2 days. So we'll see what happens.
That's what I would be looking at, but I agree with you 100%. Where are you today? Are you in La Paz?
I am in La Paz, but I may have mentioned to you in the past that there was a silo, concrete silo, being for sale in Tucson at an auction.
Oh yes, you told me that.
Well, I bid on that last week, and I was the only bidder, so I got on my first bid, and I picked up something that cost north of $25,000, maybe as much as $50,000, for $5,500, and I was the only bidder.
55. That's a big silo. How do you get it shipped though? That's going to cost a lot to ship it, isn't it?
Actually, it's a 48-foot silo, 48 feet long. And it's being shipped on what's called a low boy. It's a trailer.
A flatbed, yeah.
Flatbed, and it's 11 feet high. and it was already picked up on Saturday, and it's on its way to San Diego and should be in San Diego sometime today.
Wow. How much does it cost to ship that? About $1,500?
You're very close. The bid was actually at $1,600, but I selected another shipper and paid him $2,000 because I wanted to go to San Diego on the same trailer. So he drove from San Diego to Tucson, picked it up, and this trailer will carry it all the way to La Paz, Mexico.
Wow.
So I'm saving the unloading in San Diego and loading in San Diego, and it cost me another $300 roughly to have the trip start at San Diego.
And you have it pre-sold in Mexico?
I actually have the client already paid for it.
Oh, boy. You got a good business there, Charlie. You should stick with it, you know.
You know, it's awful fun. It's really, I'm 67 years old, and
Oh, you're just a kid.
I don't know, and I don't want to be involved in the construction of a project, even though I am guiding them and teaching them on how to use the machines. And I oversee to make sure that we have no accidents. That's really my most important part here of my assistance to them is to make sure they do it safely. And they're young. They have no machines here, and this is the first time they're going to use machine in the construction of a 10-story building.
Wow.
Not going to do it by hand. It's remarkable. It's more fun for me because I've done projects a lot bigger. The only requirement I have for them is if you want me to buy something, the cash must be in my account, and there's always cash in my account. They always arrange for it to have money in there so that when I buy, I have all the money that I need to pay the taxes and get into Mexico.
Wow.
Yeah.
Well, listen, thank you for calling in, my friend, and let me know how it goes, okay? I want to make sure that thing gets there on time.
Oh, the next part going through the months is going to be complicated. We'll see how it goes.
Okay.
And thanks for the help.
Thanks for calling in, Charlie. We always like talking to you, my friend.
Same here.
You bet.
Bye.
Okay, folks, we're going to switch over now, and we're going to do start out with the oil complex, and then we'll move to silver and gold. We've hit that 786 retracement in the heating oil last week. We actually held it for 2 weeks in a row now, which is really unusual considering this market's been straight down since early April. And so we're way oversold, and no one thinks that this market can rally at all, but it started, I believe, today. We had the same thing happen in crude oil last night. We had a very unusual situation because of the 10 options that are the contracts that are traded across the futures, and it's very active in the crude oil from March all the way out through December, with June and December being some of the leading ones. Only 2 of the contracts were able to make new lows. The spot March made a new low by just a few pennies, but none of the others did, which was a really good sign. And heating oil didn't even come close to making a new low. So there's a really good chance here for oil to have a really good bounce from where we are at this particular point. So that's one of the things that we're watching very, very closely. We have a call from New Jersey. Boy, I hope you're indoors, my friend. Robert, are you there?
Yeah, I'm good, thanks. Yeah, we don't have too much snow yet. It's coming tonight.
Yeah, I know it's coming. That's what they're telling us anyway.
Yeah, it's, there's saying from 1 foot to 3 feet. But I had a question about gold.
Sure.
If you're not in gold now, would you wait to
absolutely.
I would just get in now.
You have to wait for gold. I mean, let me put the chart up here, and you'll see that we hit some major resistance up here at 1305 last week. And what's interesting, if you look at silver was actually weaker than gold, which it's been for quite some time. But we've got a really good spot to look to go long, Robert. And that is the last correction that we had in gold came down from the 1230 level all the way down to the 1270. So it was $60 per ounce. So what we'd want to watch now is to see a $60 per ounce retracement in gold this time, which would take us down to 1230. That would be $70 down. And that's a 61% retracement. So you'd like to see that happen over 4 or 5 days. We're down pretty sharply today, which was, sort of nice to see. So if we could get the gold down to about the 1230 per ounce level late this week or early next week, that where I think you'd have a very interesting spot to go long the gold. But I certainly can't buy it. Friday it closed at $12.94, and we're trading $20 lower than that right now. So I think we're heading down to this 12.30 level. So just be patient, and I think you'll get a chance to you'll be able to buy it there.
Okay, thanks very much.
Thank you for calling in, and I sure hope you make it through this storm okay, because they're talking about it to be as bad as anything you guys have seen in the last 15 or 20 years. I don't know. That's got to be pretty bad.
Yeah, hopefully not.
Okay, my friend, and happy holiday for a new year for you. Thanks for joining us here at TFNN also. We like to hear everybody call in.
Thanks very much. Take care.
You bet. Okay, now we're going to take a quick look at the silver market, because we were just talking about that, and I wanted to show the fact that the silver is lagging quite badly. On this last move, we had a move that should have gone up to the $18.73 per ounce level. We were only able to get to $17.60, so we missed it by 13 cents, which is quite a bit in silver. And we also had a shooting star pattern that occurred at that point, but that shooting star pattern they've not been able to take out that high, and now the market's gone below $18 an ounce. We've traded below $17.95 already today. So we've got a chance here for silver to back off about $1 also, and that would give us a pretty good chance to to be a buyer in silver if we can back off to the level of around 1740 would be what I would be looking for. That would be equivalent to the last correction that we had, because once these corrections happen, once you see one, you'll probably see another one right behind it, and that's the the key to to what we're trying to see here. Now, I had one other question about the stock market, and that was with the IWM, because it is lagging so badly with the rest of the market, which is quite bearish from a technical standpoint, because we've been able to erupt pretty good today. We're making a 61% retracement in this today, but it is lagging, behind, the rest of the market. So as long as we don't get much above where we were today, which was right at the 61% retracement in this IWM, which is the Russell Small Cap ETF, we still could be heading, to the downside. This market has made what is potentially a huge triple top formation going back from February through June, and then into late December, early January. That's a very, very powerful pattern. As long as we don't, if we take that out, boy, this market could really go to the upside. So right now it's still in a downtrend, and prices look like they do want to go lower. But as we say, these are only probabilities. There's never any certainties, in any of the things that we're watching in these markets. It's all related on probability. We're going to take a little break here. We got gold down 11, silver down about 15, and we got stocks basically unchanged.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Darrell Martin here on TFNN.
Okay, folks, we're back, and we've been asked to take a look at the stock of Apple. We are forming a beautiful Gartley. It's finishing right now. We have earnings on Apple tomorrow after the close. And that is about as big as crapshoot as you're going to get in the stock market, folks, because they really move that stock quite a bit. The odds of Apple going up after earnings is quite high. I don't know how they skew that, but I remember in a period of 4 years, I think it was only one quarter where they announced earnings and the stock went down. That was 15 out of 16. Then since that time, I'm not sure what it's been, but the only way I would ever touch this with the volatility as it is at $113 is to look to buy a out of the money put, say at 105 or something like that, to to protect yourself with the put premium, because if you're wrong, you would lose your whole premium, and if not, you would have a potential big winner. So that's the only way I would handle that, because that thing could move 15 or 20 points without too much trouble. So we want to keep an eye on that one. Also, we have Microsoft, I guess, is coming out with I had one other one before Microsoft, and that is Tesla. And it's still, I think we're still going lower in Tesla. I don't think it has anything to do with price of oil or anything like that. We're having a good rally now over the last 8 days, which has been good. So, I still think Tesla is heading lower, looking at the charts. We'll take a look at Softy here and see what that looks like on a long. I haven't looked at the price of Microsoft since Gates got out of high school. Microsoft looks bearish to me, folks. We've got a whole series of lower highs in here. I don't see Microsoft causing any problems to the upside here. If you had to put a gun to my head, which I don't want you to do, but if you'll notice here on the stock of Microsoft topped back on November the 11th, long before the rest of the tech stocks did, and we've had lower highs now. In December, we had a lower high. We had a lower high again in December, right around Christmas. We had another lower high on January 13th when we had the big up day, and we had a lower high on Friday. So you've had 1, 2, 3, 4 lower highs, and the lower lows are apparent too. So this market is certainly in a short-term downtrend from November. So we've been down for 6 weeks. Maybe that's enough to give it a boost, but if you looked at it on a longer term basis, you can make a really good case for a head and shoulders pattern. There's that pattern that looks really interesting anyway. So I certainly would not be afraid of selling Microsoft into an earnings report as opposed to Apple. No, that doesn't take a lot of sense, folks, because Apple is 3 times the price of Microsoft. So, you got 3 times the risk. So with Apple, you have to use an option, whereas with Microsoft, I think, the stock would still be okay. But we've had these lower tops, and there is a potential for that head and shoulders pattern. So that's another one that looks like we are getting ready to move somewhat to the downside. Now, I wanted to end the show with the Treasury notes, because we've had a tremendous move here on the upside recently, and now the market is starting to consolidate to the downside right off of the 61% retracement. Remember, our 10-year notes are yielding about 1.9. You almost have negative. I think in Germany it's 0.25%. Japan is less than that. India is minus. So, the interest rates across the world are absolutely non-existent. So live every day in an attitude of gratitude, and may God bless. And I'll see you Wednesday on a higher opening or lower opening, as the case may be.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.